Hell of a good question, Jimmy, and you know what? That tees up our next guest, David Taylor. He's a founder of Crudefunders.com, a new concept that enables everyday consumers like you and me to invest like the big boys do. Mr. Taylor, welcome back to the Voice of Texas.
Good morning, Chris. How are you?
Well, I'm doing well. Thank you very much. Happy New Year. And what about Jimmy's question there? I mean, what about this idea
that
of a
was
bailout?
A very good question to start the morning with. That's for sure.
I'm not. And we conservatives, that's a question that's asked tongue in cheek because we conservatives are not for bailouts in any form or fashion. But it is very interesting where the preferred, the pickers of winners and losers of government, they prefer certain industries to bail out. Others can just go to hell as far as they're concerned.
And especially the ones who are just as profitable, right?
Oh, even more so. Even more so. Let's talk about our oil prices. Look, I brought this up yesterday, just touched base on it, and I wanted to explore it a little more deeply with you. Austin-based WBH Energy Partners told a federal bankruptcy court this week that its partner in North Texas oil and gas leases, they had warned it may foreclose on the private firm's stake in the leases this month after it failed to pay its $12 million share of operational expenses. A lot of these small companies are finding under $50 a barrel oil impossible to make profitable. Boil down the situation for us.
All right. So basically what we're dealing with is, and we all know this, right? So there's a supply and demand issue. And when you have an organization such as OPEC trying to flood the market, it's just going to affect everybody. And what we're finding here in Texas, and especially all of my compadres in Midland, is this is crushing a lot of the businesses because it's just too expensive to continually operate their rigs, and especially at depths, getting into the 10 and 12,000 feet. So you're going to see a lot of problems coming in with the junk bonds because they finance these companies at very, very high rates. And there's just no way that they're going to be able to continue this pattern if it goes down into 40s and 30s, which is an opportunity to get down to.
Right, and I'm hearing it could go as low as is in the 20s for crying out loud.
20s, yeah.
Let's go from here locally in Texas. Of course, Houston has a very broad energy base to it economically, and so we're going to feel the impact. Already feeling the impact here. I heard some analysis, I think it was on the Fox Business Network. Melissa Francis is the one who said this, and it stuck with me because it said, I knew this instinctively, but I never heard it put quite this way. When you have falling gas prices because you have high demand and high supply, that's a good thing. When you have falling gas prices and falling oil prices because you have low demand and high supply, that's a bad thing. Explain that.
Okay, so a couple examples. When we have high demand, which means that, even though that they're saying China is slowing down, even though that they're saying that there's other entities that have reduced their demand, it's not necessarily true. I mean, the continued need for the world's oil is not slowing down at all. What's happening is there's just so much abundance of oil that there wasn't, previously known of. And so America is finally becoming, if you look at the map of the United States and you see the regions of shale plays, it's incredible. This wouldn't even more abundant than anyone had anticipated. So what's happening is OPEC has increased their production numbers. And if you look at the United States, we have done the exact same thing. We've almost kind of flooded it with a good quality new sense of oil. So I think what's going to happen is we're going to just continue producing, and so it's going to increase that supply, therefore decreasing the value of that commodity. But it's not necessarily a bad thing because it's not based on a false projection. Does that make sense?
Well, yeah, it does, and but there is empirical data that shows a lot of the world's economies are slowing down. And when the economies slow down, typically demand for that product goes down. Now, if the economies were rip-roaring, and typically, in years past, when we didn't have a leftist occupying the Oval Office, the American economy was enough to be the engine of the world, and if we were thriving and and consuming. The rest of the world was following suit. We don't have that powerhouse anymore, courtesy of liberal policies. We're not that powerhouse anymore. So we can't drive the world's economies anymore, courtesy of the aforementioned policies. So when that's the case, when you have this flood of supply and no demand to meet it, to where everybody's winning, that's a recipe for disaster, right?
No, I agree with that completely.
Okay.
I mean, yes, sound economic principle.
Right. So
one of the go ahead.
Well, now for what it is you do. Now I know that you've set up your business so where individuals like me can invest in areas where only the big investors in the past have done this. What does it do to that dynamic of how you guys approach your investments?
So that's actually the perfect way to talk about this, because I actually praise our government on this one, and especially in Texas. So they've passed a law that allows people to actually take equity in through crowdfunding positions. Previously, before that, it was all rewards-based. So the United States has not been able to come up with a program that actually makes sense. So in other words, anybody who makes less than $200,000 is considered to be a non-expert, what they're called non-accredited investors. And so it's a way of protecting the American people, but it also excludes about 98% of investors from finding a deal or being able to invest into something that is typically out of reach. So at Crudefunders, what we've done is we've created an opportunity for just anyone in the state of Texas to be able to invest directly and participate in oil production. So what we do, and this is what, even though the numbers are scary right now, potentially going 30 and lower, but oil is one of those industries that continually must go up. I mean, there's no way possible for it to sustain at this low dollar amount, and it's a 15 to 20-year play. So what I like about what Crudefunders is doing right now is we are buying at extreme discounts, and we're taking over some of those notes, and we're doing things that allow us to be marketable and to sustain in this little bit of a dip in pricing. Think
about it this way: you're buying stocks on sale. You're buying the stuff on sale, and eventually, and we all know. I'm getting asked by Liberal Fred, who is on the Facebook page right now, asking us what the need is for Keystone XL pipeline. The liberals only have about a 2 to 3 month memory span. They can't remember when gas just a few short months ago was up in the $3-4 range around the country. Trust me, it's going to get there again. So you want to make sure you have a good, reliable, steady supply, so you're not subject to these wild fluctuations in the markets. That's why you put in Keystone. That's why you put in the infrastructure, to make sure that you don't get this type of wild fluctuation. That's an answer to his question. But it is also an answer to what you guys do at Crudefunders, because eventually things are going to normalize and things are going to go back up in this energy cycle, yes? It's proven. I mean, if you look at a 25-year curve, and you will always notice that it might have a dip for about a year, but it's going to continue to increase. And the average price of oil is always going to be, especially going forward, is going to be between $60 and $80, consistently. And I guarantee you we'll get back to the hundreds. It's just when. So what we do is we try to find projects that make sense to people and that can sustain. Like, for example, we might hold some of the for a year or two and only drill one project. And so what it does is it keeps it in at that low rate and allows our investors to perform and make, significant gains. I mean, if you look at the marketplace, you might be expecting a 12% return over a course of a year. But in oil, there's two things that can happen. There's one, you might make somewhere between a 3x or a 5x return, and you're going to have significant tax returns. So this is something that, and we've kind of opened up those floodgates, and we let you have all the information you need, from the seismology to the well, and we're a very transparent company designed to make sure that the investors know what they're doing and kind of go into it with their eyes wide open. Well, the name of the company is crudefunders.com. David Taylor is the founder. It's a new concept enabling you to partake in the market and do it. And you know what? And this is a time when diversification of the portfolio is probably necessary, especially if you get revenues from oil, whether it's either in stocks or from companies who are giving you direct compensation for your properties or whatever you've purchased around the state. Crudefunders.com, that's the email address, or the web address, I should say. And David Taylor, I appreciate your time and expertise as always.
Chris, thank you so much. Looking forward to it.
You
Another
betcha,
time.
more.
Thanks.